Good afternoon, Matt. My name is Kevin Smith. I'm a non-executive director with Iris Metals, an ASX listed lithium junior with a interesting project in the US. It's a near-term project. It's a Brownfields restart, and we're aiming to bring it online in the next year or so and meet the growing demand in the US.
Kevin, lovely to meet you. First time we've ever spoken. Might start with a little bit on you. What's your background? What have you done relevant to what you're doing today?
Sure, I've been in the energy metals business for more than 20 years at a large trading house, and did my first lithium trade back in 2009 when the Toyota Prius first debuted, and everybody thought that was the start of what we now call the energy transition. So I've been around the space a long time. I've traded lithium from $3 a kg to $90,000 a kg. So 90,000 tons, excuse me. So I've seen it through the cycle and back again here. And I've built out different critical minerals desks around the world. But more importantly, at a trading house, you get involved with looking for supply and learning where the right projects are around the world, what projects will work in what kind of markets, and finding who's really going to bring units to market. And that's my real skill set. And Iris was a project I was aware of in the past, and I had the opportunity to join the board and help advance it towards production. So I took that opportunity. In my time, I visited over 20 different lithium projects around the world, from brine to DLE to hard rock on different continents. I think I have a good background experience on what projects work and what kind of markets. And Iris's project is unique in the U.S. It's a hard rock spodumene project. There's not a lot of them in the U.S. This was a brownfield site that was mined in the Cold War days, back in the 50s, 60s, 70s, for lithium and other critical minerals, tantalum, and there's some other cesium. There's some other interesting things in there as well to help the U.S. during the Cold War period, and was mothballed then. We've come along and we're bringing it back online here. And the unique thing is, we have outcropping pegmatite. Lithium, you walk into the pit and you see lithium all around you, spodumene that you can access right away. But uniquely, we're already licensed and permitted. So we could load, what's called DSO, direct ship ore, this afternoon if we wanted to. So we don't have a lot of hurdles in front of us. We're proving up our mine plan right now. We're going to be doing a test mine activity in the next few weeks, just to make sure we understand our cost basis 100% in today's environment. But we have a pretty quick path to production. So it's not your traditional dynamic of what you think of in a Western Australian style spodumene project where, hey, we're going to go drill for 3 or 4 years, build a huge resource, then we're going to have to go do studies, raise $1 billion off an FID and go build it. We have a quick path to production by leveraging the operations that are there already, some mobile mining equipment, and we're going to have what we're describing as a hub and spoke model. So we're going to have multiple mine faces and production centers feeding a central processing plant, and that's going to be scalable, modular. And we can go around the Black Hills area in South Dakota, and we can access the different mine surfaces that we have available to us. So we have three primary mine sites already, or projects. The first called Beecher, which we put out a resource statement on recently. The second is Tin Mountain, which is in the process of being drilled, and the third is the Edison project, which is currently being drilled as well, formerly owned by Thomas Edison, hence the name, when he was looking for lithium 100 years ago. And so it was a prior producer as well back then, when EVs had their original first shot at beating out ICEs. And we're advancing these along to come up with a critical resource to allow us to take an FID given that it's prior mined in a brownfields restart, we feel like we have a high confidence factor that the resource is there, that there'll be enough material there. And so it's about ticking the boxes from a JORC perspective and things like that to ensure that we've got all the bases covered here before we pull ultimate decision.
Okay, I think that's the full pitch. But let's kind of go back a bit if we can. Like you worked across, say one of the larger trading houses. You worked across the whole battery metal suite. You chose lithium. When did you get involved with this? And can you sort of, I guess, defend why lithium's a good investment in an environment like this, or will you kind of go back to saying, well, it's the advanced nature of this? I mean, is lithium investable at the moment in the US? Let's start with that.
Yeah, one of the things that's unique, Matt, about our project is it's hard rock spodumene in the US. So there's no technology to de-risk there. We don't have to prove up a process flow sheet like the DLE guys in Arkansas, Smackover, something like that. We don't have to build a better mousetrap. We're going to use technology that's tried, proven in WA and other places, and we're going to bring that in and can start producing straight away because we're already licensed to do that. And being centrally located in the U.S., we've got a number of battery plants, cell plants, cathode plants within a few hundred miles of us. We have good rail and road access from our site. And we have a market that's essentially 100%, imported right now. There's essentially zero production in the U.S. of lithium right now. So we think we can be a substantial contributor to that in short order, while other people are still trying to de-risk, flow sheets and things like that. So in terms of lithium and its place in the investment world, we think that there's a supply-demand gap that's going to come. I think it's going to be jurisdictionally dependent, and our opportunity set in the U.S. is unique in that there's essentially no domestic production right now, so we don't have to have a bigger resource, a higher grade than a large project in Western Australia or something like that to greenlight our project. We've got willing buyers. We have people putting their hands up now saying, "Please call us when you can deliver us units. We're happy to engage with you." So we see that.
Just on that, Kevin. You said there's supply demand gap looming, and at the moment, there needs to be a lot of price discovery or rediscovery, which suggests that supply demand gap is far away. So, is there a bifurcation of the market? Is there a North American market versus global market? How do you see that kind of price discovery happening?
Yeah, I think supply demand in terms of global context, I think you need to start looking at regional markets. There's a bifurcation that's happening based along geopolitical lines and wanting to have that, if you want to call it onshoring, reshoring of these sorts of things, whether it's lithium or other critical minerals, rare earths. We've all seen the news headlines. So it's about building out the downstream so we have the capability here to deliver finished units to the market. It doesn't do any good if we just produce spodumene that then has to, in the States, that has to get loaded on a ship to China to be turned into lithium carbonate or hydroxide and put in a battery cell. So it's about completing the supply chain here, and there is a substantial gap there, particularly on the downstream processing side, which we also think we have a good solution for, where we can deliver finished battery grade lithium carbonate to the marketplace in the U.S.
Right, and where will the competition come from if it does come? Because obviously a lot of Canadian companies talking a good game about producing all the lithium North America will ever need. Are you protected from that by having a U.S.-based product?
So you in terms of jurisdictions in North America, we've all been following the tariff headlines, the tariff war, and being in the U.S., we're uniquely situated to benefit from that. The Canadian projects in Quebec and Ontario are on the other side of that tariff wall. They're going to have a cost disadvantage there as a result of that, delivering their units to the market on top of, what looks like higher CapEx overall, because these projects are, they're 500 kilometers off the grid. You have to build a road, you have to bring power, infrastructure, these kinds of things to very remote areas, build camps, all these kinds of things to get up and running. And we don't have to do any of that. We're 5 minutes from hotels, population centers, a trained workforce with a mining culture. So we've got a lot of tailwinds and, like I said, a unique opportunity set here to exploit. And that's what we're focused on doing right now.
Okay. And with regards to, obviously, ultimately, it's going to come down to your ability to mine commercially. You got to have a margin there. So the price of lithium is one thing out of your control. Things that are in your control are what you're doing on the ground. So these are all former producing properties. Some of those things will obviously need refurbishing and updating significantly, I'm sure, in places, but there are other things which obviously work to your advantage. So when are you going to get a sort of handle on the kind of the cost parameters and maybe potential capex and opex?
Yeah, Matt. So we're going to be doing a trial mining campaign here in the next few weeks. We're going to do some bulk sampling, some bulk production, and run that through a model of what we think it's going to cost to produce it. So we have surety around those figures. We're expecting to have very low strip ratios, perhaps as low as 1-to-1 strip ratio. Very easy to access. It's eventually going to be an open pit mine that's already has adits and access to it. So in terms of infrastructure, prep work, there's almost nothing needed to be done here. So we think that we're going to have a good cost basis here, that we could be in the bottom quartile of the cost curve here, and also be in the U.S., have some production tax credits in our advantage, along with some tariff barriers from, Canada and others. So we feel like we're sitting in a good place. We've got a captive audience, within a couple hundred miles of us that needs to import 100% of their raw materials right now. So, if you look at a business plan and the things you would want in a business plan for customer base, cost of production, we feel like we check a lot of the right boxes for that. And there's not a lot of other people that can do that. If we fast forward, into the 2030s, maybe some of the projects, the clay projects out west in Nevada will have gotten up and running. Maybe some of the Smackover projects will have gotten up and running by then. But I've been around this industry a long time. DLE has been, 2 years away for the last 5 years, and it seems to roll like that. And, I think the monkey's on their back to prove that they can actually do something there. There's some large, oil players in that space now with deep pockets. I'm sure they'll eventually crack the nut and perfect that production process. But in the meantime, we don't have to do any de-risking of our project. We can take off the shelf technology and we can hit the ground straight away and deliver units to the market.
Okay, you're an ASX company. Are any plans to get an OTC listing?
So Iris is currently listed on the ASX. The project is in the US. There's somewhat of an accident of history. We are looking at the potential to have an OTC listing. We've had discussions with the OTC folks. We've interviewed a number of broker dealers in the US that might be supportive of that. And we're evaluating that process right now and trying to gauge, how big the investor appetite is out there for an OTC listing. But it's high on our list here, and I wouldn't be surprised to see something happen there in the not too distant future.
Okay. And with regards to, I guess, the technical aspects of this, how far along the process are you taking it? Are you looking at producing and selling what into the market? So
Iris's production process initially is focused on producing spodumene concentrate, so SC6, that you could compare to what comes out of Western Australia, Brazil, those sorts of places like that. That's a fungible commodity. Currently, a lot of the conversion capacity needed to convert that into finished battery-grade lithium carbonate or hydroxide is in China. We have found a company in the U.S. That can do this, we think, at a competitive cost basis. We did a trial sample. We have a press release out, if you look at our recent news, with a company called ReElement, based in Indiana. They have a unique proprietary technology to convert spodumene to battery-grade carbonate. We've done some trial batches with them, and we've been able to produce a 99.5% lithium carbonate with them, and very low impurities, something that's very saleable and desirable in the market, and that we can do that at a low cost basis. They're in the process of ramping up their plant from pilot stage to commercial stage, and the timing perhaps dovetails nicely with our ramp up towards spodumene production. So we see a path to complete the entire downstream chain in the U.S. without having to go abroad, have a low embedded carbon footprint in the lithium we deliver to the market, all doing it at a competitive cost basis.
Right, okay, so obviously on this ASX, JORC it falls under separate rules to, say, 43-101, in the sense that a lot of Aussies are less than forthcoming with a lot of the numbers. If you are looking at the OTC listing, perhaps you'll have to kind of look at that, and the type of information that you put into the marketplace. Is that something that you're sort of conscious of, to be able to kind of get the support and I guess the attract the capital that you're going to need moving this thing forward?
Yeah, I think we're coming into that crossroad right now, Matt, of, is there the cost advantage or the opportunity cost of listing, an OTC listing in the U.S. versus sticking with the ASX. I think we're trying to understand, if there are people that want to invest in us, how much are they being hindered right now? Is there still a pathway where they can reach us? Or is there a large untapped marketplace there? So that's what we're doing some evaluation on right now. Large strategics, institutionals, generally know how to work these things. So we don't know that there's a blockage on raising capital that we would need for CapEx. We think that we've got a pathway there that makes sense. But in terms of getting more of a retail following in our shares beyond Australia, that's definitely what we're looking at in an open question.
Yeah, no, but I was kind of focusing on really about the available information to retail, because it obviously retail will drive liquidity, but the Aussies seem to work with a lot less information than, say, North Americans tend to want to see. So it's really a case of the openness and transparency of the information that comes out from the company if it goes on OTC versus ASX.
Yeah, I think, in terms of information that we put out to the market, we need to look a little bit deeper at, information flow that's allowed on ASX or not allowed on ASX versus what would be expected in the North American marketplace. That's still, say an open question and a bridge we need to get across here if we take that decision to go that route.
Okay, you've got a bit of money in the bank at the moment. So what are you planning to do with that money? How are you allocating that right now? Where does that get you?
So the funding that we have right now in the bank at Iris, we've announced a large drill program for the summer. It's the summer drill season in North America right now. So we're planning on extensive drilling all the way through into the fall, into October, and that will allow us to put out some more MREs on the different projects that we have, the different production centers that we have. And then also we're going to go back and do an updated MRE on our first project, Beecher, as well in that time period. So the goal is by the end of the summer drill season here, we'll have all the information needed to come out with the MREs that we think are necessary to take an FID. And so people have to understand this idea that this is a hub and spoke model, multiple production centers feeding a central processing plant. This isn't one, 100 million ton resource in WA where goes for 5 kilometers or something like that. So it's a different construct, and that's not the peer model to think about when evaluating us. So we're going to come up with, like I said, with resource statements for each one of our production centers, know that we have enough there for probably a 20-year mine life is what we're aiming for right now, and that we can do that cost competitively, and that we know what that cost is, and then we'll take the decision to go off and build it. And we're not expecting to need large dollars to do that. We've engaged a consulting company to work with us right now on that model. So we're developing our cost estimates right now on what it takes to do that, using some experienced folks out of Perth who've worked with hard rock spodumene in the past. So scaling that, sizing that, and scaling it appropriately for the quantities that we're envisioning, but also having a flexibility to move around with the different production centers that we're going to have.
Right. Okay. And look, as you know more, you'll tell us more, I'm sure. So we'll see how that pans out. Operating in the US, even as an Aussie company, can you talk about some of the advantages there? We've spoken to a lot of companies in the past few weeks and months with this new Trump administration and the speed at which it's moving. Everyone seems to be camped out in DC, lobbying for their relevant metal. And I'm trying to understand is there a lot of conversation, or is there genuine access to capital or access to industry support from industry as a result of getting the political, I guess, backing? How's it work?
Yeah, it's a good question, Matt. How we navigate the current administration. Iris's directors. I'm obviously American. We have another second American director on our board as well. We have an American president of our operations in the States here. So we're largely a U.S. company at heart, just listed on the ASX. And in terms of navigating that, Australia is a friendly country with the U.S. There's all sorts of agreements between us for a number of minerals and, free trade agreements and so on. So there's a lot of cooperation there. But we are getting out in front of the new administration, looking at ways that we can access them more effectively and more effectively develop our project. And specifically, while we have the projects we're focusing on right now are all on private land and we control that land, we have we have over 2,000 BLM claims on forestry land that are essentially untapped. We have an extremely large land package in South Dakota, and the current administration could be very supportive in unlocking that in a timely fashion, which would allow us to, essentially supersize the company and increase our footprint, radically from where we are right now. So we're looking at ways that we can fast track that and unblock that permitting process, and bring additional ground into production in the near term. So that's something we're focused on. It's been a bit of a shifting world in DC, but we have some conversations going, and we're looking to conclude that sometime in the near future.
So what do you think is important to demonstrate to not just government, but to the market? You talk about this kind of expedited path to production, and you feel you're in the lowest quartile. You could be a lowest quartile producer. The speed at which you move in this market is maybe allow you to kind of do a land grab or first mover advantage type strategy. But what do you think is important? I'm looking back to your Traxxas days. I'm looking to your investment, your money. What's actually important for a company to do, and how should it behave, and what sort of steps does it take towards that point, whatever you think that is?
As I evaluated projects around the world over many, many years in the mining business, the thing we would always focus on was, can it deliver actual production units to the market in a meaningful quantity and timeline at the right part of the cost curve? And I think Iris ticks all of those boxes quite well. That's why I'm here. I'm not an explorer. I didn't come here to drill holes. I came here to execute on a business plan and deliver units to the market and satisfy customers and monetize this production in the best way possible. That's my skill set. That's what we're focused on here. Right now, this is about, the drilling that's going on the ground is about proving up, ticking the right boxes that we need to tick to take the decisions. But I think you can go out there and have a look and see enough lithium to say, hey, this dog hunts and it works, and it's probably doesn't need to wait around for the lithium price deck to reset. It probably can monetize with a margin in this market right now. We're doing our modeling off of 1,000 tons spodumene, which is not too far away from where things are right now. And we think we've got really good margins and a good MPV that we can deliver. We're hoping to put some of that out to the market in the not too distant future off the back of some of our studies here. But we're not sitting around where we need, a doubling or tripling of prices. We don't need to go back to a highly elevated price deck to have success here. So that's the business strategy. That's really, why this project, I think, stands out versus peers in the world, and why people should think about investing in it, in terms of, is lithium investable? If I had a 100 million ton project in WA that was 5 years and $1 billion away from production, that's a totally different decision matrix that you need to navigate. That's not our business case here. Our business case is already permitted, brownfields restart, close to market, 100%, dependency on imports right now, tariffs holding back competition from outside the U.S., and a quick path to production, perhaps as soon as the end of 2026. So we're not too far away in mining terms. That's essentially, that's next week in mining terms, very quick and within the time frame where people want to engage in contracts. So we're proving up our project to the point where we have confidence to enter into contracts with people. We think we'll have bankable offtakes there that'll allow us to raise the funding we need for CapEx and take this into production and execute on the whole plan.